Hi, and welcome to this month's edition of Jay's Financial Fitness. Since September is Life Insurance Awareness Month, I thought I would get a head start and explain a little bit about the different life insurance products that are out there, because I think in my 30 years in financial services, nothing has been more misunderstood than life insurance, the different types, how they work, the good, the bad, and the ugly. So we're going to spend a few minutes on this. I call this Life Insurance 101. So I thought for today, instead of me drawing and you seeing the back of my balding head, I would write it out in advance so you can focus on this a little bit better. So the first type of life insurance is called term. And term really is like renting. It starts out inexpensive, but it does go up as you get older. It goes up in either 5, 10, 15, or 20-year blocks, but the end of the day is it does get very expensive and it increases in cost quite a lot. The other problem is it's kind of like renting. Like if you rent an apartment, you give back the keys at the end of 3 years, 5 years, 10 years, and you have nothing to show for it. The big problem is it expires when you're older and you end up losing your life insurance. So for a lot of people, they're only worried about today with their children, but there are many reasons why you're going to want life insurance later on in life. Initially, it has the lowest cost, but in the long run becomes very expensive because, again, all this money that you put in is gone. There's no return of capital, and you lose the insurance. So if someone had $1 million or a $5 million policy and they paid for it all these years, and then they drop it when they're older, they haven't passed away, and now the family is at all those premiums that could have been invested, and they don't even get the insurance. So the $2 million or $5 million or how much insurance you had is gone forever, and the family never sees it. It does have an application if you're young, you have a couple of kids, a big mortgage. The most important thing about life insurance is having enough to protect your family, to making sure that if something happened to the breadwinners, that there's replacement capital to provide an income for the family. Then we're going to move on to something called Universal Life. Universal Life is one of these products that came out in the 80s when money market rates were going through the roof. So you have a level premium that you're paying, and you do have some flexibility with Universal Life on how much you pay. But the negative is that it starts out inexpensive, and the cost of insurance internally in the policy goes up as you get older. And usually there are two schedules. There's a current schedule, which is favorable, and there's a guaranteed schedule, which is not favorable at all. Most projections I've seen only highlight the favorable cost of insurance. So initially you build up a little bit of cash value, which is great, but as the cost goes up, the gap between what your internal cost is in the policy and what you have goes down, and it goes down as you get older, and many of these policies lapse that I've seen over the years. It's like term insurance with a money market. It appears to be permanent insurance because it looks and smells like permanent insurance, but it may not be. A wide range of internal costs, a wide range of results. Your policies collapse or they could be okay, depending on all these factors, a lot of which out of your control. And there really is a very high degree of uncertainty in these particular policies. Speaking of uncertainty, I take one more step into the fire, if you will, something called variable universal life. Very similar to the one I just showed you, Universal Life, except now instead of a money market, you have a stock market or bond investments to choose from, and obviously there's volatility. So just like in the stock market, when you have volatility, it creates uncertainty with your portfolio. Here it's the same thing, but with your life insurance. So you do build cash value, however, the cost internally goes up, and depending on what happens with the market, you may have money in a policy or you may not. And the problem with these types of policies too, if you're building money, you really want to be able to take some of the money out and use it for your own use. That's kind of the point of building some of this up. But if you're using some of this money and your costs are going up, you could create a quicker lapse. So it creates an illusion of maybe having money available, but you might sacrifice your life insurance. Very, very dangerous. Now, the last kind is called whole life. And whole life and term have both been around since like the 1850s. Whole life, you're going to pay a little more money than Universal Life, and you're going to have a level premium. You also have level costs, which is good. And you build a cash value. So you have level premiums, you have guaranteed cash value, you have guaranteed death benefits, and you have lifetime coverage. And that maybe is one of the biggest difference over this and the other forms, is you can have this for your whole life. And that's probably how the name originated, that you'll have this for your entire lifetime. You do get dividends in the policy if you buy whole life with a mutual insurance company, and those dividends can later offset the premiums, so you don't necessarily have to pay those particular premiums down the road. Whole life really gives you the most certainty on your life insurance because it'll always be there as long as you pay your premiums. The goal of life insurance, as I mentioned just earlier, is to have the right amount of coverage initially, but then have the right kinds of policies to help you throughout your lifetime. Many things are going to change in your lifetime, but the one thing that is not is you're always going to want certainty and security. So I hope that was helpful. Over the years, I've been asked a million times the difference between universal and very universal and whole life, and it's confusing. A lot of the universal life products seem to look and smell and feel like whole life, but they're not. There's a big difference. So make sure you're sitting down with an insurance advisor who can explain these differences to you and find the product or combination of products that's going to work best for you and your family. I mean, the goal is for you to have security for you and your family and make sure your money is put in the right place. So I hope this helps. I wish you a lot of luck. Enjoy the rest of the summer, and I look forward to seeing you next month. Thank you.